Okay, welcome everybody. Welcome traders. Let's do a quick mic check as always. Make sure you guys could see the screen. Make sure you could see me, and make sure everything looks and sounds good. So just type something in the chat and let me know. Jeff, yep, there should no longer be an echo. Savage. Yes, good, solid, great. Well, we do have, thank you, Rips. We have a guest on tonight. Coach Jay is going to be joining us in just a moment after we start to kick things off. That's going to be the real test for my audio skills. We'll see. Like I said, sometimes it's baptized by fire. Learned some while we had Rips on for Monday, so we'll see if I learned. While we get started, as always, my name is Coach Dakota. Welcome to Slow Markets. We're going to be talking about the live markets, and when we talk about the live markets, and we're going to be doing live trade analysis, everything that I say is primarily for educational purposes, right? And we also have Sarah Hecker in the chat. Sarah in the chat, and let me post our risk disclosure. We always want to post our Top Step risk disclosure, so that way if you guys see me place a trade, we don't want you guys copying it, and if you happen to just do exactly what I say, then the risk is on you guys, right? Because futures, there's nothing that we can say or do. You have your own control, so it's up to you guys to trade your own strategy. Let's get into it. If you do have questions, feel free to type them in the chat. I'm watching. We have the lovely Danielle as well, feeding me some of the questions. And then awesome heck Sarah is in the chat as well to answer some questions if she so pleases. Everybody's usually hanging out in their pajamas, unless you're international, and then maybe you're just waking up. Maybe it's just the afternoon. Whatever it is, it's not financial service. It's trust me, bro. So let's get in. Let me see if I could go ahead and bring our guest. You know, I didn't hire a female model, but I got the next best thing, and that's our guest. There you are. You are now live, Coach Jay. Let me see if we can blow you up just a little bit. Always a test and fun when I am trying to bring guests. So let's do an audio check for yourself. This is what we've been praying for.
Here. Hopefully we sound good. We can talk through some trades, and then we'll get going.
Awesome. So here's a couple questions while we get going. And traders, feel free to throw in questions as they're. I know when I first started out as a coach here at Topstep, it feels like it's been like only a month, but how long has it been? I started as a coach.
December? November?
Yeah, I think it was around November. And then, of course, you were here before I was. And then I started to, present this trading style for everybody. And then me and you've been talking. I've learned a lot from you. And then I've also started to see you trade some overnights. And before the stream, when we were testing out the audio and getting everything set up, I just asked you the question, like, what do you look at when you're looking at the markets at this time of night? Because I know you primarily look at the book, right? You look at the DOM
Correct.
and order flow. So if you could go through and explain that a little, maybe a little more detail, because of course I'm sure everybody in the chat is curious that maybe if it's not a pure technical view, that there's another way to look at the markets at this time of night. So you have the floor.
All right, let's do it. So I think you have my charts up. And like Dakota, like you were saying, I'm purely an order flow trader, right? I rely on volume and price action to make my trading decisions, normally during the trading day. So transitioning to trading slow markets, right? There's a clear difference in volume, right? You can see the volume indicator that I have down here on my chart. Overnight, during the Asian London session, we're going to have less volume. if you compare that to what we see during the regular trading hour session, right, this is a ton, right? So when I look at this, I can read this and see exactly where I need to take a trade based on the volume that's coming in. I had to make adjustments to trading overnight because we do have less volume. I'm still going to rely on it, but I'm more so going to use concepts like something like VWAP, right? What I have here, you see this purple area here. I'm an opening range trader, and this is the Asian session opening range. And what we have, that purple line, is VWAP for the Asian session, right? So the way I'm reading this is whatever volume came in, right? Relative to the New York session, it was lower volume, but whatever volume came in, the market is buying it right now, right? We can see VWAP left this opening range, and every time we test down towards it, it acts like a support, right? So I'm going to use that as an area of opportunity to potentially take a trade. And then I'm still going to use time and sales because any executed order, right, whether it's a 1 lot or a 3 lot, should show up on time and sales, right? So I'm going to use time and sales for confirmation, where if I'm taking a long trade from here, I want to see that there are buyers that are continuing to come in on time and sales that support that trade idea. What I can do is lower this filter. Right now, I normally use a filter of 6 for the regular trading hour session, but obviously we know it's lower volume, so I could lower this down to 1, and we'll see what this time and sales looks like then. You can also see the order books. I'm usually in the chat during the day, during fast markets, calling out the bigger orders. We're not going to see many 100 lots and 1,000 lots get filled in the overnight session, but size is still out there, right? We can see right now, 18,123, there's a 48 lot and a 57 lot. Might need to increase the font size on that so it's a little easier to see. But there is still liquidity in the market, right? There is still volume up here that we can potentially trade to. So I'll be looking for that. And that's pretty much it. It applies the same way, but what I have to understand is there's likely going to be less quicker follow through. So I'm okay with putting on a trade, learning some of the strategies I learned from you, Dakota, putting on a trade, letting it work out, going to sleep, even though I don't sleep as well as you do yet. With taking the trades, maybe I need to drink some sleepy time tea like Rips, so I can stay asleep through the trades. But it's a comfortable feeling, right? You identify an area of opportunity, establish what your risk is, and you go from there.
Okay, perfect. Yeah, it seems like we're running into those audio gremlins again. We had that test before we hopped in here, and it was beautiful. But yep. For some reason, whenever it comes times to show, stuff tends to break. That's okay. But no, I agree with you. I was talking to Rips earlier, and he was talking about he placed a trade on Friday, which was a beautiful trade on the NASDAQ using options, and in terms of his view on options in NVIDIA. And everybody has their own style of trading, right? And then you just explained that you're looking at DOM and you're looking at these different the order flows in the book, which is a beautiful thing to see because I've seen you place some amazing trades overnight. It's a unique thing to do, and I think that also shows and it proves that there's not just one style of trading. Even though I do have my slow markets class and I do help explain, I'm a pure technical trader, and even though I'm just a pure technical trader, this overnight and this slow markets concept that I'm trying to help traders understand is that we could place trades during the slow markets class or during the Asian session or even the London session, right? Using these different trading styles and be successful, right? You don't have to be a pure technical trader. You could look at so many different things. Essentially, we want traders, and I would love to continue to have Q&As similar like this and keep bringing traders on, maybe bring some of the other coaches once we figure out what's going on with this audio, that we're able to get more people and maybe even include yourself, bring yourself on, maybe bring Rips and other traders on who has started to trade this slow markets concept or holding trades overnight to see what they're looking at, maybe they're also a pure technical trader. And I do see, and I think you were using not only volume, you're using an indicator, and it's a different. It's interesting. Have you traded this type of style before in any of your previous trades, or how comfortable do you feel going to sleep with an order on?
I've gotten more comfortable with it, but I do like to identify markets that have the potential to move overnight, right? One of the better overnight trades that I've seen recently has been in Bitcoin, right? We know what Bitcoin has been doing, trading up near all-time highs or soon to be all-time highs. But for me, it's pretty comfortable if I can identify a setup and establish what the risk is, right? I've learned from you how to look for areas of opportunity. I've learned from Coach Paul how to use the ATR as a stop. And what I found with Coach Paul is a 2 ATR stop on a 30-minute chart is normal. If you have good trade location, is normally out of the way. Right now, for me, what it is accepting whatever the dollar-wise risk is for that trade, and then just putting it on. It's no different than taking a losing trade during the day. The only thing is you go to sleep, right? I normally, my trades during the day are normally anywhere from 5 to 15 minutes, and I sleep at least 6 hours a night. So it's getting comfortable with that. But as far as technically setting up a trade, it's the same idea. I'm looking for a trade idea right now, and if I zoom in on the chart, this is exactly how I would analyze. Like I said, I use volume to trade, so I'm going to try to look for volume anomalies similar to this one right here, right? This volume candle is larger than any of the other volume candles that we see. This tells me that buyers came in, and what I normally do is try to look for an entry around 50% of that candle. And you can see right here, if we split this candle in half, this 50% starts to act like a support. Your exit could be on the opposite side of this, with your target really anywhere up above it, right? So here we go. That would be a 1-to-1 if we trade back to the high of that volume. But if we continue going and we get follow through, and again, follow through might be harder to come by overnight as far as volume goes, or it might take longer for follow through. But then I would set my targets somewhere up here, either a 2-to-1, 3-to-1, 4-to-1. Likely I'd go with a 4-to-1 for an overnight.
Interesting. And you typically go for those higher risk rewards, right?
Correct.
Have you ever experienced any trades that are, I don't want to say upside down, but they have maybe a negative risk reward? Maybe that's the way to say it, where you, instead of going for a 1-to-4 where you're risking $1 to make $4, have you ever placed any trades that were the opposite of that?
Sorry, say that one more time. You said instead of
a negative risk reward. Because I know that, and I think I heard someone talk about it before, which it's not uncommon, right? Because we have risk reward and we have win percentage, and they go hand to hand. You can't have one without the other. Where you could also be successful with having maybe a much higher win percentage, but then a lower risk reward. Say maybe even for every dollar you're risking, you're going to be making like say 95 cents.
I have, and normally the reason I'll do that, like I mentioned, the 2 ATR stop. Let's see, on a 30-minute chart right now, if I was to take the entry that we were just talking about, a 2 ATR stop would put me somewhere around. This would be a pretty big stop. It would be almost 50 points, right? And we see how far out of the way that is. And really what that is just, hey, you put your exit somewhere out of the way, more than likely not going to get hit. At this time, I probably would go with 1 ATR instead of 2, or scale down to micros to adjust the dollar-wise risk, because that's almost $1,000 for a one lot, which is pretty expensive. But I will, if I need to put my risk somewhere out of the way where I don't think the market can hit it, especially on a random wick, and then risk 3 to make 1, I would do that, because more often than not, and I've talked to Coach Robert about this as well, those inverse risk to reward trades, that stop is going to get hit a very low percentage of the time, where if you take the same trade over and over, the winners will cover the losers.
Yeah, that makes sense. Have you ever taken a negative risk reward trade before, for an overnight type of style? Or maybe here's a better question that I was wondering, because I get this a lot with a lot of traders, understanding the concept of scaling. And I know there's a lot of traders here in the chat who, you guys are always asking me this question, where you have a 50-point stop loss on the NASDAQ, and that seems really, really big. And some traders associate having a bigger stop loss with bigger risk, right? And that's not necessarily the case. And so maybe in your point of view, how would you explain and be able to explain a new trader, just even a trader who's been here for a while, just because you have a wider stop loss does not mean that you have to be risking more money? Because I go through this a lot, and I really want traders to understand that, maybe just jam it into their trading and repeat until we get a lot of traders that are able to understand that a lot better. So we do have a question, but by Rodrigo. It says, first time here, Dakota, a couple of months ago on Topstep. Tell us about your trade entries, setups. Thanks. Not worried to interrupt Coach Jay. I think that's fine. Still figuring out some of the audio issues, but well, Coach Jay, if you want to go ahead and figure that out, I'll wait for the audio to start working again. But I could explain it. I actually had a really good trade that happened, tonight. So let me go ahead and show you. Can you guys see my screen? Let me know if you guys can see my screen. I have a 6-second delay, so it'll just you should be able to see my screen. I have the Nikkei, so it should say the Nikkei USD futures. This is the Japanese market, and if you remember what we were talking about yesterday, right? Where we were looking at this as a bullish flag. So let me zoom out, and we could review this for a moment. So let me go ahead and do that. We might as well resume, and this will help me answer that question, because this has been a really crazy rally. So let me go ahead and get this set up. 1 second. Okay, there we go. So here's a 60-minute, here's a 60-minute chart on the Nikkei, and you guys can see we're in a rally up and to the right, and we had a bullish flag, and after we broke out of that bullish flag, we rallied, right? And then we're having the same thing, right? We had another bullish flag, and sure enough, 1 second. There we go. So we had another bullish flag. Yeah. Coach Jay, you are muted for a minute. I'm going to finish this and I'll bring the audio back in. So we had another bullish flag yesterday, and today, or pretty much, today during the New York session, you could see that we did break out of this bullish flag. Very much what we were talking about yesterday. And when we broke out of it, the hardest thing for us as traders is, how do we get in? Like, we were able to watch this trade break out live. I was watching it. It's such a hard thing to get in. And you can see this is an hourly chart on the Nikkei, right? And sure enough, the past 2 hours, and I was talking to Coach Jay right before, let's see, in just a second, I'll bring you in. But I got in long, and I was not expecting a move like this. This is one of those where it just moves really fast, and it's very hard to capture. Let me see, because I did take it in my live account. So let me make sure I'm in my live account. It takes a moment to load. I was in a demo account just to get the data feed. And then while that's loading, let me see if I could bring you in, Coach Jay. Can you hear me still?
Yep, I can hear you. Can you hear me?
Yep, I can hear you. my live account is loading, but yeah, like I said, right before class, I was talking to you, and you said, I was like, I'm getting into a long on the Nikkei. And as we were testing and getting everything set up on my end, I had the Nikkei chart, and it was every 5 minutes, I was like, man, this Nikkei just is not stopping. And the next moment, it was like, we just broke all-time highs. And then the next thing, I'm like, well, are we going to see any type of resistance? And I'm like, well, maybe we'll see 40,000 by the end of next week, or at least sometime next week. And then the very next hour started, and sure enough, we kept going up and up and up. I'm like, well, maybe we're going to be seeing $40,000 tonight. This has been a crazy rally. And sure enough, of course, we wish we wanted to capture this entire move. Unfortunately, I didn't capture this entire move. It's really hard to capture this entire move. I'm not like the best trader in the world, and neither should we all be the best try and be the best traders in the world, because we're always talking about base hits. It's okay to be average. I am very much an average trader. And so this is my live account. I mean, I'll show it in just a moment, but I just wanted to show you this trade, Coach Jay, and then I'll pass the mic back off to you. So I'm going to zoom in to a 5-minute chart, and it has a thin order book. And as you know, with a thin order book, we have a lot more gaps, and you could see it's a lot more exaggerated how big of a move this is and that we are currently experiencing in the Nikkei. Let me see if I could show my entries. Let's see. Let's go here. Bam, there. So this was my trade on the Nikkei. Just one contract, but let me walk through it. We had a all-time high in the Nikkei right here at 39,625. And when I opened up the chart and I seen we had this really strong rally, we rallied up, and I didn't get into the trade. I waited. I was trying to practice being patient, and I put a limit order, as you can see, right at 39,500. So I had that limit order. The reason why, it's a nice psychological level. It's right near an area that used to be resistance here and here, 39,500, and saying we have a chance to break all-time highs. And I would love to be in a long if we break all-time highs, right? So sure enough, we did get a pullback. I got filled, and then we start a rally. And you can see, right? Hindsight's 2020. I would have loved to hold it on. Of course, I would have loved to hold a trade on and catch the entire move. But all I did, just catch a piece of it. So, yeah, what's your thoughts on that, Coach Jay? Because it's so frustrating, because after you have hindsight at your back yeah, of course we'd love to just buy it here and sell it up here, but that's not the reality of trading. Just catch what I need to have a soundboard with the Topstep team, like Mick, where I can just push a button and you have like Mick's voice saying, catching a piece of the trade. Well, that's all we're doing. Right. We're catching a piece of the trend.
So where was your exit? 39, right around 39,700?
39,665 was my exit. So let me see if I could get my P&L up on the screen. I did it in my live account. $825, which is nice. One contract, right? And that also goes on saying we don't need to be trading big size. We don't need to be 2, 3, 4 contracts. $800, give me that as a weekly salary, and I'm happy.
One thing, I'm looking at the Nikkei, and I'm looking at where your exit was. What time was that exit?
Let's see. Let's see. So I entered at 17:30. My exit was at 8:10. So it was right at 7:10 p.m. Central Standard Time. You could see it. Now here's the thing, and maybe I could explain my exit a little bit better, because it looks like we're going to continue to break higher. Is sometimes I drop down to a much smaller time frame, and you could see my exit. Let me see. This is a 1-minute chart, and you could see the gaps and how ugly it looks when you have a thin order book. So there's my entrance, and then there was my exit. At the time, it looked like an amazing exit. I'm like, oh, wow, I can't believe I got such a great exit. But then after the market rallies, then it doesn't look like the best exit. At the time, yeah, it looked like a great exit. But that happened right at 7 p.m. Central, 7:06 Central Time, right as we were getting a more spike in volatility during this Asian session. So go ahead, take it away. It seems like we're still might having a little bit of audio issues, but we should be okay to go.
All right, sounds good. So hopefully you can still hear me. Talking through my AirPods now, but if you can pull my charts up, Dakota, I want to just, and again, hindsight is always 2020. If I was able to trade with hindsight, you wouldn't know about Warren Buffett. Everybody would be talking about me. But if I'm looking at the Asian session when it opens up, if you have my charts here, again, these purple lines are our Asian session opening range, right? And I use a 3-minute opening range. And then you can see exactly what happened when the Asian session opened, right? So we had all the buying that started prior to, but then with this opening range, this is like a perfect opening range breakout. It's funny, I was asking where your exit was because you said 665, is that correct?
Yeah, 39,665.
665.
And we're just continue to break up. We're now breaking into 39,900 as we speak.
So the one thing I want to point out on this chart is if you're a trader who, sometimes it's hard to get in a trend like this, right? You see this market, it's how do I get in here on the sidelines? How do I get into this trade, right? Let's see if we had the chart like this, right? Before Dakota got into it, right? Dakota gets in somewhere down here, around 500. The market rallies up for about an hour or a half an hour or so. Let's say you saw the market here. For me, what I would do is, right, and in hindsight, again, Dakota, I should have done that. Here's our opening range here. We can see the opening range gets established. The market does not trade below it. And again, volume came in to establish that opening range. The market respects that volume. And this is a pretty cheap trade you could take here, right? This is a one lot. If I get in at the high of the opening range and risk the low of it, it's $225 for a one lot,
Real
right?
quick, I
And
think I just fixed the audio, so keep going. I think I just fixed it. I found a source. So there we go. Big win. That's a big win. I think I fixed it. There
we'll
we
do
go
it
now.
live.
Yep, we're good to go now.
We will do it
Building
live.
a plane as we're flying.
Yeah, hey, as long as it's still in the air. As long as it's still in the air. But here we go. The opening range high held, right? So if this was the regular trading hours and this was a NASDAQ trade, this is an A+ setup for me, right? Opening range is established. Here's our first 3 minutes of it. We hold the high of the opening range. You could set your entry right here. Risk the lows, $225 risk for what would be a almost 6-to-1 trade right now.
Yeah, that's. So, have you traded Nikkei? Have you placed any trades in Nikkei? I know when I first started here at Topstep, I was surprised to see that not a lot of traders were trading the Nikkei. And then once I started holding the slow markets class, there was a lot of traders who started trading the Nikkei, and I don't know if they fell in love with it. And some traders now are doing amazing, and it's helped them pass combines. I've had traders message me and say, "Hey, I wouldn't have been able to trade or pass combines if it wasn't for the Nikkei." And then some traders even say, I got my first payout just because of the Nikkei. And so we have the popular markets like the NASDAQ, oil, and the ES and gold. But then the Japanese market, Nikkei, which we do get this amazing volatility during slow markets, is great. Yeah, Jay, your audio's off. So,
How's my sound now? Is
oh,
that better?
that's so much better.
Okay. We will figure this out.
No, that audio, I think the audio is fixed. Yep, I just had to disconnect my camera for a moment to fix it, but everything should be good to go.
Awesome. So all we have to do is remember exactly what this setup is, and we will go.
I should have been
All right.
recording it. Yeah, now it's going to take me an hour to figure out what I did. No, it's to be honest, it was something really, really simple. I don't dare say it because I'm going to get made fun of.
Don't worry about it.
It's muting you to me. That's what, because there's like 4 or 5 different inputs.
Dakota. We just don't pull back the curtain. They don't know what's going on in this side of production. It
So
looks
it's
good.
Like, oh, I forgot to mute this one, mute that one, a whole bunch of bells and whistles in the background. But I think we got it now. We got the camera. I look good, you look good, and now the audio's on point.
Like Coach Prime said, if you look good, you play good, and if you play good, they pay good. All right. So let's talk about these let's talk about these markets. The Nikkei is still breaking up. If I was looking to get into this market right now, right, this is a trend. You see how far I just anchored VWAP to the opening range for the Asian session.
Yeah.
And we're pretty far extended from it right now. Right now, traders, I told you all the time when I was on TopstepTV the other day, I don't like to swim in front of the shark. Right up here, this is a shark tank up here. Right, the market stopped moving. Right, we can see the rejection on that candle. I'll remove those fibs so we can see it. We can see the rejection here. This is too far removed from this volume for me to take a comfortable entry up here, right? Because of the potential for the market to pull back. So for me, what I would be looking for is I need to get an entry closer to this VWAP. And the way VWAP is trending, it's telling you that buyers are in control, right? Here's our opening range. Since the Asian session opened, buyers in control. And you don't even need the VWAP to see it. The candles are going that way, right? But I'm going to look for an entry as close as I can to VWAP and then set my risk the same way. Right now, a 2 ATR stop would be 50 points, so just about $250 on a one lot, and that's 2 ATRs on a 3-minute chart. So I would place an entry right there. Right, I can place my entry there.
That's the hard thing to do, and I've noticed it a lot, especially in the Nikkei, because when it rallies like this, you feel like it needs to have a pullback, right? And then you wait, and then you wait. Just like we were talking, I'm like, oh man, we're already at 39,700, and then the next thing we're at 750, and I'm like, God, dude, I feel so tempted to short it. But then, yeah, it's just one of those things, right? Because and maybe this goes down, and you could probably speak on this better than I can, in terms of the different markets have their own unique personalities. So what's your views on that? Because I trade the main 3 markets that I currently trading is the NASDAQ, oil, and the Nikkei. But you look at a lot more of them, right? Like how does it look for you in terms of the different personalities in these different markets?
Yeah, so each market, just like each trader, has their own personalities, right? Different paces that they move with. So, and like you said, with the Nikkei, the personality of the Nikkei, and I think a lot of traders are saying it in the chat as well, because some of us may have missed some Nikkei trades hoping for a pullback. It normally doesn't give you one, right? So with this trade, I could say maybe this is a hopeful one, but the personality of this market, and we can just look at it, right? Look at any of the pullbacks we've gotten so far. This is a 100-point pullback, which is decent. So maybe, but right now I would need 150 points. And when's the last time this market has showed me a 150-point pullback in the overnight session, right? We have one during the day, but in the overnight session, we may not get them. Each market has its own personality. Again, I've recently placed some trades in platinum, and I understand that if I place a trade in platinum right now, I might get good trade location, but I'm going to have to wait until about 3 a.m. Eastern for this market to really start moving, right? So I'll go ahead. If I have good trade location that I'm okay with, I'll put the trade on. But I understand that if I sit here and try to watch the market move now, I'll likely convince myself to get out of that trade, right? Where if I understand the personality of the market, it's, hey, you know what? Put the trade on. It's not going to move until 3 a.m. So get your trade location and just leave it. And Coach Ray just said it in the chat. It's all about location, all about location.
Location, okay, and that's, that was the thing about my Nikkei trade too. Like you guys can see my charts now, is I've been trading Nikkei, and I know it could rally like this, and when it does get into a rally, it'll just go, and go. I was happy with the profits. I still am happy with $825 in my live account. Could I have made more? I think yes, of course. We could always go back and do that. But it's one of those things that if you get into one contract and you have to close that contract out somewhere, and it's better to be happy with profit. But maybe that's the power of scaling in that I talk about so often, where if there is micros, and yeah, Nikkei does not have micros, but if we're trading NASDAQ or something else, drop down to micros, maybe get into multiple contracts, and then you can close 1 or 2 contracts out, be happy with the profit, and then have that discipline to scale out of a trade. Were you watching? I don't know if you catch Topstep TV. I was on Power Players today. I had a lot of traders ask me. So let me switch to the NASDAQ. I had a great trade on the NASDAQ. Let me go ahead, because data is always...
Yeah. Pull it up.
So here's the NASDAQ. Traders always ask me. I had an amazing trade on the NASDAQ in terms of entry and location. But here's the NASDAQ. This is the 5-minute chart. So let me review this, and then we'll just get back to the normal program now that we have all the fun stuff fixed, because we'll go on the NASDAQ, and then we'll work our way to oil, and maybe take a look at Nikkei again. So here was NASDAQ today. We had the big news, right? I believe it was some inflation data. Correct me if I'm wrong. And it came in as expected, which was really positive to the market. And it was a really good thing. And very much like Nikkei, we were looking at this consolidation, this almost identical to the Nikkei, right? That news allowed a beautiful breakout trade. I was sleeping when this happened. However, if we start to zoom in, when we did break out, and you probably see me do this, quite often, is typically we like to pull back, find some type of support, and then have this continuation. Well, right before Power Players at 11 a.m. Central Standard Time, we did have a sell-off. I got into 2 or 3 contracts down here. I closed out of one a little bit early, and then I was able to hold one throughout the Power Players. And of course, it's the same thing. Would love to have held it much longer, but just a trade like that, very similar to the one we had in the Nikkei. Do you scale in and scale out, or what's your thoughts on getting into multiple position, and how do you scale in or how do you scale out?
I was actually in that trade with you. I got in at 17,935 in the NASDAQ off that bounce. And I got in 2 contracts. I got in 2 contracts with the idea that I could take one off as we push up. So I think I got out of the first one at 17,975. And the other one I got out right after. There was an area of resistance that was right above there. In hindsight, I talked to Coach Paul about this. It was a trade we could have still been holding it, again, if we were not trading Topstep accounts. But yeah, I will scale in and out of trades all the time. Traders ask me, how many trades do I normally take in a day? And the way I like to break it down is I might have 2 or 3 trade ideas for the day, but then multiple executions of that same idea, right? And that's how you can scale in and out of trades, right? Where you're taking profit on some, you may hold one as a runner, the market pulls back a little bit, but you still agree with the trade idea, so you can get back into another one. So it's 1 or 2 trade ideas, and then multiple executions of that same idea if it's still valid.
Nice. Were you getting in as it went down, or were you getting in as it was reversing?
As it reversed, as it reversed.
And then where did you have your stop loss? Because I know traders love to to know where we're putting
Yeah.
our stop losses at.
Right. So let me pull up the chart real quick, and I'll tell
I'll
you.
switch to your charts. There we go.
Where's the NASDAQ? There we go. All right. So, and I actually did a loom of this exact trade. So it's in the coach's library if you want to check that out. And I break down exactly what I was looking at. I'm going to take some of the stuff off the chart. But we have this big volume spike. Shout out to Coach Ray in the chat. He's going to call that Bigfoot. So we have this big volume spike here, which told me that was probably exhaustion of this downward move. And then again, I'm going to do the same analysis as always. I'm going to cut that candle in half and see if I can get an entry somewhere near 50% of that candle, right? So when that printed, I had my first entry right here at 917, right? You can see it came down to within 2 points, maybe 2 ticks of my entry. Didn't get into a trade there, but the trade idea was still valid. So when we pushed above, and now I'm looking at us holding the high of that candle. The high of that candle is right around 936. We get a close outside of it, and I take my entry there. And then because I didn't get the entry at 50%, that was my risk. So with a one lot, that was about $400 risk on that trade.
Okay. Perfect. That makes sense. Yeah, that's about the same amount of risk that I typically take per trade. You know, right around 375, depending on what the trade is and where it is. Do you? Maybe that's another good question. Before we jump into our normal program of slow markets, what's your risk per trade that you typically like to go for?
So I normally, as a default, my trades are going to be. If it's a NASDAQ trade, it's going to be 10 points, right? Which is $200 per contract. And that can be pretty tight. So what I'll do is, like I said, as a default, if I put on a trade here, I'm going to have a 10-point stop, where 10-point stop can be pretty tight with trade location. So then I'll adjust it from there if there is some market structure that I should allow to work, right? But at that point, what I don't want to do, like I don't want to go from a 10-point stop to a 30-point stop, right? Because what that tells me is that I probably have bad trade location, right? I could get better trade location in that case. So I like to be wrong pretty quick, and then I can reassess what the market is telling me, right? Is the idea still valid? Can you still get in? Did you get in at bad trade location? Did you get bad timing? But I'm going to start with 10 points and then adjust it from there.
Okay. Yeah, that makes sense to that makes sense to me. Yeah, so let's dive into it. I'll have you join me, and we just have 15 minutes left. This 1 hour goes by really, really quick. And if there's any type of thing that will suck up any of the time, and then it seems even faster. So let's go ahead and dive into our normal slow markets analysis. So I have the daily chart up here on the NASDAQ, and it's looking really bullish to me. I mean, this is as good of I don't say, this is very attractive to me, Coach Jay. Over the past 4 days, we've been in consolidation. This is a daily candlestick here on the NASDAQ. And since November, we all know we've been in a bullish trend. However, this week and over the past 4 days, we've been kind of in consolidation. We've been in that.
Dakota, just real quick, you have my chart. You have my charts up. If you want to go ahead and share yours.
Oh, good catch. Good catch. Okay, there we go.
Yep.
So here's the daily chart on the NASDAQ. And like I said, ever since October, we have been in a bullish trend, right? And over the past 4 days, we've been consolidating. You can see 1, 2, 3, 4 days of consolidation. We did have this bearish candle, which we barely wicked a new all-time high. Since then, it's just been consolidating, going down and to the right. However, today, we officially broke out of that consolidation. We're continuing to push higher during slow markets and during this Asian session. And we're at the highs, right? We're at the highs of our sessions. And what's the all-time high? The all-time high right now is 18,144.75. We might be seeing a new all-time high tonight.
It's gonna happen.
It's so hard to say. I want to be able to say I guarantee it. But
Yeah, we can't do that.
it's one of those. I mean, very similar to like February, right? The beginning of February. Whenever I see a candlestick like this, man, it's so attractive. Just like, man, we're gonna get all-time highs. But that's what I'm looking for between tonight and tomorrow. Tomorrow's Friday. It's the last trading day of the week. So the question we always have to ask ourselves is, if we do believe that we could rally and we could start making all-time highs, just like we were doing in the Nikkei, how can we take advantage of it? So pretty much I have my bias. I know the direction that I want to be trading on this daily chart. Next, I want to zoom in. We're going to be dropping down to a 60-minute chart. As we all know, that's what I do. So here is a 60-minute chart, and we could start to granulize it. We could see it a lot better. You can see that we broke out of this consolidation. We broke out, we went down, we tested it, and now we're having that continuation. And so now we're all sitting here. Everybody was watching NASDAQ. Everybody at Topstep, everybody around the world. We are all watching NASDAQ. And we're looking at this and we're saying, I couldn't imagine. Is there a single person that you talk to, or can we find anybody in the chat who doesn't think we're going to break all-time highs? Let me know. Is there somebody here in the YouTube chat that does not think that we're going to be breaking all-time highs? Because this is the all-time high right here. Let's see. What was it? I said 144.75. So who does not think we're going to break all-time highs? Richard, do you think the market is going to dump tomorrow? It is Friday, and also anything could happen. But maybe this is a better question. Who wants to sell this? Who wants to short this? And is that going to be? Is there any reason to short this market? Yeah, because
I don't see a good one.
looking at it. What's that?
I don't see a good reason to short it at all.
But then how do we get into a trade like this? That's the next question, right? Is how can we take advantage of market movements overnight? Because you know what Hogue and Eddie and MP and everybody on Topstep TV in the morning is going to be saying? They're going to be having the market gap up, and they're going to maybe see the market. We're already up 0.25% since we opened up at 5 p.m. Central. They're going to wake up and the markets might be at all-time highs. And then it's like, then we have emotional traders start to kick in. FOMO, oh man, I wish I would have bought down here. I just knew it was going to break out. Maybe I'm sitting in the same situation. We're all watching NASDAQ and saying like, man, we all know it's going to get to all-time highs. But how do we get in? Like, how are we able to get in? And two things that immediately I think of, Coach Jay, and you see me do this all the time. All you guys here on YouTube probably sees the same thing over and over again. And there's two ways to take advantage of a market movement overnight, which is using limit orders and stop orders. One is if you think that we're going to break to all-time highs, and you do believe we're going to have a nice move past all-time highs, like the Nikkei, maybe we just use a buy stop. So this is an example of a buy stop. Okay. You guys probably will hear the order submitted. So hopefully I'm not giving you guys PTSD, and maybe I'll just use blue lines, right? Maybe we put a buy stop up here and we have a stop loss. That's going to be the next question. Like, where would we want to put a stop loss? Because we don't really have too many reference points to put a stop loss, if any, right? Like maybe below some type of high or pivot. And then where do we get it? Where would we put a take profit? That's maybe even a harder question, is how could we look for a take profit when we don't have anything to reference, when we're making, new all-time highs? Do we just close our eyes and say, maybe one ATR, maybe a $200 round number, or, 18,200. I'm not sure. Maybe somebody in chat has better ideas. I think Anne-Marie said something about expectations, maybe an ATR, maybe some way to gauge. Essentially, it's all just guessing, right? So this is one option that we can do as traders is using a buy stop, just saying maybe the market just sells off, maybe we consolidate, but as soon as we break and get new all-time highs, then I will get triggered into a long, and then it will activate maybe a take profit and a stop loss. So the next thing I want to do, we have Fibonacci extensions. Maybe have you ever used those, Coach Jay?
I haven't. No, I haven't. If you look at my fibs, they're very simple. It's 0, 50%, and 100%, which are not fib numbers at all. So no, I'll say no.
Okay. Yeah. So I don't know. To me, this is just one of those where it's like, if you're not already in a long, I don't want to chase it. And if we do break new all-time highs,
order canceled.
It's breaking it without me. and I'll just wait to get in at a better risk-reward opportunity. The other option, now hear me out. This is one that I might prefer a little bit better, is maybe I put a buy limit order. And now what this is saying is the market would need to sell off, trigger me into a long, and then I look for a move to the upside. Now, something like this is a little bit better for me, so that way I could have a better way to limit my risk. So maybe a buy limit, because very basic, resistance becomes support, and it looks like we just broke out of this resistance. So maybe we look for it to become support. Maybe something simple like this, where I'm getting a better risk reward. I'm not sure.
What are those? What's that price level you're looking at, Dakota?
What's that?
What was that price level you're looking at for that pullback? Because I think the way you're averaging it, the way you're looking at it is the average pullback. Is that right?
Sometimes I do an average pullback. The price that I'm currently looking at is based off this. This used to be resistance right here,
Gotcha.
right around 18,080s. And so maybe if we do get a pullback, resistance will become support, which it, does fairly often. Not 100% sure. It's a really tough trade, I think, on the NASDAQ, and the risk reward's just not there for me, even though we're just continuing to push higher and higher here in the NASDAQ, and it's probably causing a lot of FOMO. So what's your thoughts on that, Coach Jay? On, like you said, maybe Fibonacci's, where would we be able to put targets when we're breaking all-time highs and we're in uncharted territory? So going to switch it back to your charts, and then you take it from there.
All right, sounds good. So the first thing I would think, I personally like the pullback trade a little bit better, where I'm looking at this anchored VWAP to this Asian session opening range here, where again it left the opening range. Right now it's sitting at 18,102. As we keep pushing up, I'm expecting this VWAP to trail up somewhere around this 18,110, and maybe looking for an entry there. But then setting targets, again, you're above highs. So what do you go with? For me, I'm going to default to psychological levels, right? And the first one would be 18,150, which is right above that all-time high. And then from there, next psych level is 18,200, right? Does the market have the energy, the volume to get there? If you ask some of the other coaches, I know Coach Paul, he would say, look at the ATR, right? On the time frame that you take the trade. If you're going to risk 2 ATRs, then target 3 ATRs, right? So right now, the ATR for the 30-minute chart on the NASDAQ is 26 points. So if I was to get an entry at 111, where this VWAP is right now, 2 ATRs, to do public math, 26 times 3 is going to be 78. Someone check my math. Did I do that right?
I'm not sure. I wasn't.
78. So somewhere around 18,190.
That sounds about right. Yeah.
Somewhere around 18,190.
Interesting. That would make sense. I know you said the word. What's an average pullback? And we got a couple questions in the chat. What does the average pullback mean? I'm going to switch to my chart and explain that a little bit. I'm curious if you remember when I first showed this to.
Of course.
Of course, because it's a big thing, and I'm this is kind of a sneak peek, guys, to something that I'm going to be teaching maybe next week, and I get into more of a rhythm, and we get a lot of this fun stuff figured out for my slow markets. So you guys see my chart. This is an hourly chart, okay? And what I was showing, because we have ATR, which is an average true range, but to what I call this is an average pullback, is when we're trending on the NASDAQ, typically, this is an example from the middle of February, is this was a nice rally, okay? When we are rallying, all I typically do is measure the moves of these pullbacks when we do rally, right? And this will give me maybe an average is all I'm looking for. This is just an educated guess. I try and get an average that, what's the average is when we're trending, how much do we typically pull back? Then I take this and I basically copy and paste it. And you could see it's relatively accurate, right? We could go and we can measure these. It's kind of weird how sometimes it's kind of this accurate, huh?
It's scary.
It's kind of scary because it's kind of like, it's just weird, right? Like, see how it's not 100% of the time, but this is something I'm gonna maybe be. Wow, like I haven't done this in a while, but that's weird how I blow my mind sometimes when I'm doing this because it's weird, right? So sometimes if we do get a pullback, then maybe I look for a pullback that is about around there. Now remember, it's not exact math, right? It's not exactly 80 points. It's an average, right? So if we do get a pullback, and as soon as we get close to these average pullback, wow, I haven't seen it this accurate for a while, which is actually kind of interesting to me. I might have to bring this up a lot sooner than I mentioned. Wow, could you imagine if we were using something like this during this chop, right? Let me.
And it's funny. I love the way trading works because we all have different ways to get to the same answer. Coach Ray just said in the chat that measure is pulling back to a prior demand, right? So he has a demand level there. Your average pullbacks are going to bring you to that same spot. It's not a coincidence, right? That might look like a good area to take a trade.
Yeah. And remember, it's average. Anything with average, there's a margin of error, plus or minus, right?
Right.
But then we have, if we do get a pullback, maybe this will help us say, how far are we going to pull back before I start to look for, long entries? And this could help give us an idea. Now, this is on a 60-minute chart. It's not a golden goose or golden. It's just that's the definition whenever you hear me or Coach Jay say, maybe it's an average pullback. Because we could have bigger pullbacks. Obviously, we do all the time. Maybe like we could see this one. Like we had this really big pullback, right? We also had something similar today. Nothing is 100% correct. The only thing that I could say is 100% the correct in the market is anything can happen. So yeah, I think that really is it, right?
Yep.
There's a mic drop moment, but yeah, next week, maybe sometime next week, I will be maybe going in a little more detail. We ran out of time now, so let's leave it up to a brief, if you guys don't mind, 5-minute Q&A. We did lose some time with some audio that's now fixed, so whatever, if we take anything away from tonight, I'm taking away that I got the audio fixed. But let's do a quick 5-minute Q&A to make sure we got some of the question answered for me or Coach Jay.
Let us know what you have. And I see 717 people watching. If we can get that like button hit for some of the information that we're sharing, hopefully it's helping you with your trading or just hanging out. I know we have a couple of traders that are actually in long trades right now in the NASDAQ, maybe looking for some breakouts. So really nice trade to all of you there. But if you have any questions, let us know.
Yep. So
and Dakota, you run the show. We can go a little late.
No, yeah. I mean, I like to stay on schedule because we don't want 1-hour sessions. But whenever we run into something, I am perfectly fine going an extra 5 or 10 minutes after, which I'm sure everybody here would be happy with. So there's a 6-minute delay. So let's get these questions in. I'm going to go through some of them, and the ones I miss, we'll just do a quick one, right? We don't want to go in depth. We don't want a really long, drawn-out answer or question. Just a quick Q&A. Sorry, we didn't cover crude oil tonight. We'll have to catch that starting Monday. Did either of you have trouble holding onto winning trades when you first started? Wholesome Pro, 100%. That's one of the hardest things to do. I still struggle with it sometimes. Obviously, you guys seen that Nikkei trade tonight. I wish I would have held on to it longer. Turnup, we all know who the GOAT is. We just watched LeBron drop 34 on a win over the Clippers. Hey, LeBron James is my greatest of all time for my generation. I know. Hogue and everybody who's from Chicago, they're Chicago Bulls and Michael Jordan. So
let's see what else we got here.
The pod, I don't think I would be able to have the time to look at that. If you save that next time, are you up for MOC Trade Challenge during Vegas contest? MOC Trade Challenge. Well, when I go to Vegas, I'm gonna be with my team, and we are gonna be in the middle of a challenge. And when I'm not, I'm gonna be on the poker tables. That's where I'm gonna spend my time. I might not even sleep. Sean King, there's a Michael Jordan fan in the house.
Yeah,
so
right.
Have a great night, Jim. Yeah, I mean, he's 39 and he just dropped 34 in the league, right? And yeah, there's always the debate. We don't want to turn this, me and Coach Jay, I know for a fact we could sit here for like the next 3 hours talking about basketball. And I think he's even playing tonight, right? There's the difference.
I think he is.
MJ got retired. LeBron's over here making another all-time scoring leading record tonight. In 15 minutes, there's going to be another all-time scoring record every time he. Oh, man.
There's a question there in the chat from Blake. So right after we get off this call, I got to go pack. Getting on a flight to Cancun in less than 8 hours, and I haven't packed at all. But the question was, will I drink more mojitos or margaritas in Mexico? To be determined. Probably margaritas.
You're gonna have
probably margaritas.
When you get back, we'll get you on the show again, and we can see how that is.
Drink some water before that.
Yeah. Thanks, Rips. Always love to have a big tick swinger net. And Rips has been my trading buddy, Coach Jay, and yeah, always love to have him. We always tease each other, and he was the one that we first went through that audio issue with. But Good night, everybody. Enjoy. Thank you, Coach Jay. And if you didn't know,
for having me.
I'm competing with Fast Markets to see if we could build this audience and get more, likes. And they could, what I noticed? We could even see if somebody subscribes because of this video. They could see that behind the scenes, which is really cool. So if you guys if I have subscribers during this class, they could see that. So, there's that as well. So likes and subscribers, and then like the view count is typically what we're comparing slow markets to fast markets to. I'm a very competitive person. You might know that, Jay.
Of course.
I'm not going to stop until I'm neck and neck with the best of them. Even though I can't fix an audio, and it takes me a little while, but eventually I'll get there. Yeah.
Dakota, I got one more thing. If you can share my screen one more time, we can end. There's something pretty important I got to show here.
Do I need to preview it?
No. It should be okay. It should be okay. It should be okay.
Here we go.
Should be okay. Come on, Danielle's watching. There you go. Hopefully my screen is up, but you can see it now. LeBron now 40 points away from a 40K career. Drop the mic, Dakota. I think we
Oh
can end the
my
show now.
gosh. Oh wow. Wow. His game starts in 20 minutes. I'm going to be watching. He could do it.
Absolutely. 40 points
39 years
tonight.
old.
Let's see if it happens.
All right, coach. Love it.
All right.
I'll catch you later. Thanks, everybody.
Have a
See
good
ya.
one.